So I'm always looking for the most efficient way of doing things, and earning passive income so I can quit my 9 to 5 is certainly not easiest done by stock picking. Certainly not by the normal way of doing things with technical analysis, fundamental analysis, and forecasting models. So what's a man to do? I thought there must be a better way to do this. And then the epiphany came to me. The easiest way of investing is to invest in index funds, and I've already made a video about that. And the index that I'm trying to beat in this portfolio update analysis challenge is the S&P 500. Now, the S&P 500 is made up of about 500, a little bit more, companies. You may have heard about the 80-20 principle. Now that means 80% of your outcome of something is generally done by 20% of the input. So it might be that 80% of your profits come from 20% of your investments. It might be that 80% of your profits, if you're a business, come from 20% of your customers. So I thought about applying this principle to beating the market. So instead of having the S&P 500, the top 500 companies, what if I took 20% of that 500 companies? Or even if I took 20% of 20% of those 500 companies. So 20% of 500 is 100, and then 20% of 100 is 20 companies. So I'm going to be looking to try and invest into the top 20 companies in the S&P 500. So I actually set out to find out what the top 20 companies were in the S&P 500, and it turns out it was a little bit more difficult than I thought to find that information. But I did manage to find this list right here. So the plan is to build a portfolio of the top 20 companies of the S&P 500, and that in theory, by definition, should beat the S&P 500, because the rest of the 480 odd companies will be getting less returns, and they'll be dragging that return down overall. Now with this, I am aware that I will have to keep my finger on the pulse as to which the top 20 companies are, and so I'll have to be addressing this every week, every month, and selling companies that are not in the top 20 companies. I'm also going to have to keep an eye on those 20 companies to make sure that they are still performing, because I don't want this to happen. Okay, last month my portfolio was down 4.74%, and as you can see, I am now down only 1.46%, which is a considerable increase on last month. Now, top 20 companies, my biggest winner this month is Google. I bought some Google. I've got some Google in another account that I have. I think it's with Stake. I've got some Google. It's another app which you can get free stock with if you sign up down below. You know what I'm saying? Then we're up £1.97, although £1.89 is what it looks like it's actually up. That'll be the difference between the foreign exchange fee and the discrepancy between the pound and the dollar exchange rate. I think the dollar's got a little bit weaker compared to the pound over the last month, so that's why that's not exactly the same. Okay, Coinbase, the absolute worst performer by a mile is Coinbase. I bought it at the IPO. Awful idea. Check out my last portfolio update if you want to see why it's such a bad idea. It was at £71.93 and it is down even further now at £61.31 here, and it's absolutely atrocious. I will keep hold of Coinbase. I think next time the next bull run comes around, crypto, in the next market cycle, I think Coinbase could definitely head a little bit higher. Okay, so what else have we got? We have got Facebook. I bought £20 worth of Facebook. I'm not a big, massive fan of Facebook as a company in general, but I do think Mark Zuckerberg's got a pretty good business head on him. Anything that's going to challenge Facebook, Mark Zuckerberg will just buy it. So think of WhatsApp, think of Instagram. Just buy it up and then you take on the growth of those new companies. Okay, so what have we got next? We've got Ishares Physical Gold. Now this is still up. This is, I invested £100 when I did a video on 10 ways to invest £100. Link up there. And I'm still up. I'm not expecting this to go to the moon. I'm not expecting this to go anywhere particularly good. I'm just expecting it to hold its value. So it was at 102.71 last time, so I'm down a little bit, but again, not too worried about that. iShares UK Property. It was at 105.92, it's now at 105.47, but this is the super exciting bit about this. Look, if I click in here, go down my investment, my history, I got a dividend. I got a dividend payment of 68 pence. And I can see now why people get excited about dividend investing, because it's 68p that I've done absolutely nothing about, and it feels somehow a little bit more exciting than just seeing the growth. But maybe that's just me. And I know that this is cash that I could use without selling any of my stocks, which is why people go for dividend investing. Okay, so what's next? Johnson & Johnson. So Johnson & Johnson, another solid company, number 8 in my list of top 20 companies. Johnson & Johnson's been around for a long time, not going to go anywhere, and it's a pretty high performing company. Obviously, it's one of the top 20 in the S&P 500, so I'm feeling pretty confident that Johnson & Johnson isn't going to lose me too much money over the long term, and may in fact help beat the index. Let's see what's next. Salesforce. Now then, I invested £10, it says £9.99. Again, I think that's due to the difference in the dollar and the pound, and I am currently up 1 pence. My wife's cousin works for Salesforce, and he is a massive fan of the company, and he is somebody that picked Apple right back at the beginning as a company to watch, and I think, yeah, he's a big fan of Salesforce, so Salesforce hopefully will do pretty well. Now then, I bought more Tesla. I bought 0.12 shares worth of Tesla. I was down last month, but now I am up. I am up £7.41 with Tesla. Tesla's had a storming day today, apparently. I didn't catch the whole news. I did see Sasha's live stream thumbnail saying Tesla bounced back, so that'll probably be what that is. And then finally we have the S&P 500. I've invested £350 into the S&P 500. I am currently up £8.64, so that is 2.47%. So the market's up 2.47%. I'm pretty sure I could say that I am up further than that if we take out Coinbase, but I'm going to have to work blimmin' hard to try and get rid of those Coinbase losses. So that's it for another portfolio update. If you want to check out 10 ways of investing £100, check out that video right there. If you're not retired yet, then you can check out that video right there. If you want to see inside my first buy-to-let property, you can click there. See you in a sec.